Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Subscribers, my name is Steve Vetterl. Today is the 29th of May, a year that 2021 seems to have flown by pretty quickly. We've already gone through damn near 6 months. Gotta love it. In any case, this is the Saturday software strategy session, and hopefully I can drop a little bit of undroning on wisdom and get off some of my diatribes at podiums and many of my tangential paths that I seem to go down. But even though I may be a bit monotonous with all that fluff, hopefully pull some decent nuggets out of there to lower the risk management in your investing life. Because I'll tell you, over the course of the last week, just looking at some of these Bitcoin charts here and almost everything else in crypto land, most of them been cut in half. And it's interesting how quiet all the positive folks were on buying it at 60,000 per coin, that it's going to 500. They're all mysteriously quiet. This is a lot of what has most of the people suspicious of a lot of the gurus and supposed experts that, you know, when you find them on Twitter and they get some fast following, you very rarely can dig stuff up on them, right? You don't know who the hell they are. They could be broadcasting from their parents' basement in a Grateful Dead t-shirt for all we know, right? So my goal is to try and keep you away from all these crazies and all the great things we do at Auvoria as far as vetting out and building the pipeline. And I can tell you, I've seen some of this option stuff. This really had some excellent results. So I know we're looking to launch hopefully in the middle of June with this manual trading type of system that's going to piggyback on an existing system that Nathan and the guys are working on. So certainly looking forward to see that as an additional product in the lineup. I do not have any more information other than that. So let's take a look real quick at the calendar. For those of you guys are looking at my screen right now, today's the 29th, tomorrow's 30th. The last day of the month is the 31st. This also happens to be Memorial Day. So a quick shout out to all our service members that have passed, protecting our country and the armed forces. We appreciate it. This was a holiday. This is a banking holiday, okay? Moving into next week, do understand for a good chunk of the higher end financial sector that is based around New York, this being mutual funds, hedge funds, all that, we essentially are kicking off for this group, which is probably 2/3 of the majority, or 2/3 of the geography of this country. Essentially, this kicks off summer. So tendencies to lower volumes, especially with the pandemic lifting and all of the draconian measures that many states have decided to lift. Thank God California is following, albeit slowly. Everybody's sort of getting back in action and wanting to travel. I think this is going to drop precipitously trading volumes in the markets across all areas. So it's probably a good time if things are slowing down in currency land. And hell, I could be wrong. Next week would be, you know, really volatile. Just look at the calendar here, right? And we've got Chairman Powell speaking on Friday for the U.S. Federal Reserve, and it's also NFP, which stands for non-farm payroll. This is one of the biggest numbers that is released globally. This was a very surprising number last month. So I honestly would not be that heavy in accepting lots of trades if things are not in a particular trend, right? And continuing to move in that trend, I'd be, from a risk management standpoint, a lot less hesitant to not trade. So on Monday's a holiday, at least for us here in the US and UK. We've got on Tuesday OPEC meetings. This would be interesting to see what kind of comes out of this with the price of oil going all over the place due to shutdowns and ransomware attacks and all that crap that's taken place. And then the Governor Bailey GBP, seems like GBP and a lot of what's going on in terms of his speakings, put some movement in some of these pound-based currency pairs in terms of the majors at least. So I would be aware of that on Tuesday. Wednesday is an Italian holiday. I should probably know what this is because I'm Italian, right? So observance of National Day. I didn't even know that. So learn something new every day, right? So know that there's a holiday, at least for Italy. Not going to mean much for volumes. And then on Thursday, the ISM, which is, it's a decently sized news event. Something I think not to be trading through. I don't know that I'd be trading through any of these events, quite frankly. Some of the software will pause for that. Some of you got to manually pause it. So do be aware of that. And I know that developers have been talking about those in the course of the last few months in some of their calls. So do tune into the developers call in addition to mine, or you can just at the very least watch the recordings in the back office, like I know most people do. So it's pretty much all I want to say about calendar. Let's jump over the charts. For those of you in this room or watching this, we do record these and put them up in the AP Live back office. I do have a Telegram channel. If you are not subscribed to that, I would highly suggest downloading the app on your phone if you have a good smartphone. And you can always turn off the constant notifications it sends to you. But at the very least, I would get notifications, not from the chat rooms associated with the software, but from the main room itself. This may seem a bit redundant for many of you on this call, but I continually get questions about this. If you guys have any questions on this, you can post Q&A if it's a question for me in the Q&A window, please. If you just want to say some stuff to the group, that's fine. Just use the chat window for that, the different window. So in terms of Market Watch, do know that we have all of some files. I've shared a whole bunch of links, obviously. I think the key thing is when you look at photos for any of these chat rooms, including mine, focus on the ones where it's just the candlestick charts. I've talked a lot about this, the different movements, and try to give you guys some color on what's going on. Going to add in just a little bit as I've been doing more and more with a crypto discussion. Stay tuned next Saturday. I'm actually going to be bringing in on my charts the concept of what's called a VWAP. So it just stands for a volume weighted average price. You can run VWAPs over long periods of time or short. You can anchor them from particular points in the movements of a market, right? So you can anchor a VWAP from the high in the S&P that you see here, and then it will begin to trail or track. These are very effective technical analysis tools in addition to the three moving averages you see and the volume that you see on the bottom of the charts. And I, by design, have kept these charts very basic until I've just gone through. And I feel like everybody's got a fairly decent grasp of at least candlestick movements. May not understand the patterns at this point, but the support and resistance is associated with it. But I'll be bringing the VWAP in next. They have gotten, at least from my confidence, so to speak, enough of the Pine script finished on some of these indicators that they're pretty accurate. So I'll be loading on some VWAPs coming up. You can move VWAPs around. You can move them over long periods of time. Look for areas of confluence as to where they show up. So S&P, again, tight range, almost near the highs. Move over to the dollar. With the exception of one gentleman named Heinrich that I follow, you look me up on Twitter if you want to see him. He's a very well-known money manager out of Finland, if I'm not mistaken, that is excellent with currency directions. So I always will sort of check my work against what he's talking about. But this guy's actually completely flipped and is really looking for a big dollar rally coming up. So in the grand scheme of what's going on in the US dollar over what we're now looking at is a full year, each of these on this daily chart, each of these candles represents a single day. But what we're seeing on this is that I personally think he's wrong and we're going to break and head lower. But I'll tell you, some of the best prognostications to come out of these markets, regardless of how good he or she is that analyzes the market, has always been much more successful from the standpoint of going against the crowd, right? So the efficient market theory and the multiple Nobel Prizes that have been awarded in this area have taught us that markets have most information priced in. I can't say that's the case for crypto because I don't understand it that well yet. But generally, for most liquid markets, they have many events priced in. So what the takeaway from that is, and ridiculous amounts of research that have been done on this, is that the market is efficiently pricing in future events. What I do not think the market is pricing in right now is a dollar lift, just because the boat has gotten so heavy on the dollar downside. So when I see it tilting heavily towards one side, makes me sort of stand up and pay closer attention. Maybe I'm wrong, right? Maybe the markets will begin to lift here. If that's the case, I think it's really going to catch a lot of institutions that are heavily short the dollar off guard, right? So, I always, in any risk management, whether I'm buying or selling anything for any account, including mine or the family accounts I run, the question is always asked is, hey, this story is so great. What am I missing? What if I'm wrong? What is my approach, right? Well, if you think and you have a good hunch and you have a good track record of typically making good calls from a gut standpoint on a lot of this stuff, you just take a smaller position. I mean, it really is that simple, right? If you think, one stock I've been tracking real closely, which showed up number one on the IBD list, which is a super accurate list historically on terms of breakouts, called Celsius. And this is a great example of, wanting to buy. I'll show you guys. It's just a quick. It really doesn't matter the whether we're trading stocks, bonds, ETFs, currencies, crypto. The point is that if the story's fantastic, and this is maybe more in a stock land discussion, and these guys, the growth of their beverage drink has just absolutely exploded. And you can see it in just how the stock's done just over through a pandemic, by the way. Notice in this particular, if I can make this a little bit bigger, illustrate the point. A lot of people will always try and buy on the dips. And albeit, if the dip is significant enough, it can always be a good time to buy, right? But you are far better, in my opinion, and the statistics are very much on your side, that if you let a proper base play out, you buy the breakout. It's that simple. I mean, I can teach this to a fifth grader, as I joke with my son, Evan, who's actually in seventh grade now, but has the brain of a kid that's in 10th grade. He understands it. So he's actually been helping me with some of the scanners we built in, just look for stuff that's breaking out. The Investors Business Daily List, which is published every Saturdays, it helps in terms of the research. But you want to have a great story that nobody's talking about, right? It's not Roblox. It's not, when Airbnb and all these companies went public, they were way overpriced when they hit the market. I mean, you want a story like an Intuitive Surgical 20 years ago, right? Nobody's talking about it, but now they do all the Da Vinci robot surgeries with this bot in all the teaching hospitals. This is a type of beautiful breakout that you want to buy. And you can go heavy on this stuff too, right? So it lifted up a bunch. Now we're building a much bigger base, more broad. Let me just reset the scale. And you can see where the breakout point is, right? So we're building arguably a double bottom here, looking to buy the breakout at the top. So regardless of what you're looking to trade, whether it's oil, gold, and this is a daily chart, so this is a much more powerful pattern. right? Many of these patterns that you see were the patterns that played out over and over again in the very early days of the Amazons or the Nvidias, right? Or the Applied Materials, or some of these stocks that have gone on to, in many cases, tens of thousands of percent return, right? They built these types of bases over and over again and continue to break out on an explosive earnings story. So just keep this in mind. As you guys know, I'm obviously heavy skewed towards the equity side because I can see the volumes, I can see what's going on. I know that these, in the case of something as a NASDAQ stock like Celsius is, they're executed on one or two centralized exchanges. Everything's aggregate. There's no games played with bid or ask. The spreads are tight. Commissions in most cases are free, right? So it just reduces all kinds of risk from investing in something like this. And that's why I think the options as an additional product, which trade on some stocks, not all, can actually come out and be a real benefit to buying this. So, if Celsius in this case was a great breakout story and it had a liquid options market that was traded on it, and you maybe didn't want to invest in the stock, or maybe it was a little too expensive for your account size, you can always go and buy the options, right? On the breakout. The options are going to move exponentially in the direction that the stock breaks out in. Or if this was a pattern that was completely flipped upside down from what you see, it's breaking out to the downside, going down and down, like a lot of crypto patterns right now. They look the opposite of this. Then you can just come in and buy the puts, right? Or you could be a seller of the calls, which is a bearish position. And typically, just understand in option land, historically, the writers of the contracts are usually the ones that perform much better than the buyers. So if you're buying a call option, looking for a stock to break out, like on this one as an example, you'd buy the whatever strike forward. But in this particular case, the options maybe aren't traded as liquid, right? Not as liquid as options would be traded on like an Apple or a Google or something like an Amazon. So just as a side note, just want to use this as a teaching example. You can apply this theory to Forex charts. You can apply it to commodity charts, obviously stocks, crypto. I mean, all these patterns play out over and over again. And in many cases, they become a self-fulfilling prophecy. So let's jump back with what we've now learned and move into Euro US dollar. Always start off with the daily, in my opinion. You can work higher and the patterns become more solid typically, or you can drill down into something as a smaller time frame. But just in the grand scheme of things, we've on Euro US dollar, we've continued to lift as the dollar sold off, and ideally want to see a break of this 23.20 area, somewhere in this, to a much higher level as we move up to the weekly charts. I would see 25 certainly in the sights as to truly the line in the sand from a lifting standpoint. If I'm wrong and the dollar does not continue its descent down into the 85 and ultimately the 80 area, in my opinion, before we see a rally, then this chart could do completely the opposite of what we're looking at and drop back down inside this range long term, closer to damn near closer to par, right? 1-to-1 in this whole 0694 area. Just keep that in mind. Pound dollar daily chart, really looking like it wants to lift. We're right on the edge of, could be just an absolute zipper through this whole area, as I've been talking about over and over again. That's what I'd be looking for ideally. Kind of hard to buck the trend, right? You can draw all kinds of trend lines just flanking the upper and lower sides of all these wicks you're seeing literally on this whole lift right here, as I'm doing with my crosshairs. Just draw. We're still in a trend up, so don't fight the trend. Just go with it on a potential breakout. So GBP CAD, got some questions on this one. John, I always start off with the daily chart to answer your question. You can always work higher, weeklies, monthlies, right? The patterns that you see especially the ones I've posted. I've posted a lot of data and a lot of research you can get off the Telegram channel. There's a lot of it in the AP live training as well that basically goes through all the different candle patterns, learning technical analysis, more from a generic standpoint, and then the relationships between the patterns. There's also a lot, that's where it requires a lot more screen time, in my opinion, to get that type of insight, if you will. It's taken me many, many years to see the relationships between the patterns to each other. CAD Swiss, just so you can see here, we were trending up for a while. We were basing for a long time, but notice this is using my previous lesson. This is our breakout point right here, which was perfect. And you wouldn't have fought that, in my opinion, knowing this move until you had some sort of significant pullback and started to form a base. This has been really sloppy, but notice the base is tightened up. So now that it's getting tighter, potentially could see a lift back up. I don't have as much clarity in when you start getting muddier and muddier from the majors, right? I have a lot of clarity, I hope, from a DXY analysis first, and then on everything that is affected in the majors directly related to the US dollar. And then I consider something like this a tertiary in terms of, or pin action off of other currency moves, right? So I always will start with the majors first and then move into some of the smaller majors and then some of the crosses, obviously. So with that being said, let's go back to another major here that's just been absolutely moving down daily. Got to move the weekly on this, begin to get some clarity now. We're still hanging right on the edge of the cliff. So dollar continues to weaken. CAD, I expect it to continue to get some strength on this, but really is a pretty big line in the sand. And who knows? Maybe my boy Heinrich in Finland's right, you know? USD/JPY. Notice we're on a weekly here because I figured I'd just show you guys this, but on the daily, a break from a pronounced downtrend and then a complete move up. This is one of the very few currencies that the dollar's had strength against. A lot of it just has to do with Japanese policies being crap. So let's take a look at the Euro/JPY. Again, daily to start. Pronounced trend up. I mean, I don't even need to draw the lines anymore. You guys can sort of see the whole channel, if you will, that we're moving up in on this one. You got to go to the weekly to see what's going on. Ultimately, I would think this is what's going to be what I call a magnetizer. Essentially, it's going to be wanting to go up to this test, the top of this auction range over many years. I would expect, if we continue to see strength in the euro, obviously that means we got to see weakness in the dollar. Hence why I always start with the dollar charts, right? And then I move into this type of analysis. But just been real solid on moves up. I just continue to be hard pressed to accept, if I'm accepting manual versions that are coming in me via alerts, I'd be hard pressed to be accepting lots of shorts on this. And the last thing I would want is my software to be getting me deep 5, 6, 7 levels deep in the sequence on a short. It's against the trend, you know. The guys are smarter than that. GBP/JPY. Let's take a look at that next. Ooh, look at that little lift out. Daily. Let's see what we got here. So we got a lot of spinning tops right here. We got a couple of dojis. Not really the best pattern, honestly. You get. I don't really ever try to read too much into all this kind. All I'm reading from this, you guys, is that it's an indecision day, right? And that's all you really need to take from stuff like this. I mean, you can get into this. Well, here's a hammer reversal, and then here's a spinning top. Here's a doji, right? I'm sorry, this is a doji. Spinning top is where it has a broader wick up and down. but they're all kind of indecision or neutral based days. So if we're lifting, we're coming out of a big area, right? We know this whole 53 spot 5-1 or the whole 5-0 area has been a big resistance. Now it's support. And at some point, I don't know, I would assume a bigger institutional or a group of institutional buyers came in and just lifted out, right? Again, pound's been strong against almost everything, that much more so against the weakest currencies, that being the yen and the dollar. Hopefully that helps you guys understand this. You even take a look at a monthly chart on this. See how much clarity you get when you look at the monthly. We're up against a big area. So you notice this could be, drop back to, so we're at a huge resistance point right now. This whole 155 spot 71 area, drop back to the daily chart. Knowing what you know from the monthly, right? There's your zipper. See that? Everybody take a close look at this. If you're not paying attention to the screen, do. Because here's an example of a zipper run, meaning that we know that more than likely that area is going to be an area is just going to want to gravitate towards, right? And we call it a zipper because it just basically sprints up to the area after a number of days of indecision. Actually, I could take a picture of this. It's a good teaching example here. Let's snap the picture. Cool. Mohammed, kudos, my brother, for asking me to take a look at this, because it helps with finding good teaching examples that got lots of clarity. Already go through this? No. Take a look also, actually, since we're on the subject, at the Singapore dollar. So this has been, and arguably maybe 50 pips lower, is really like the edge of the cliff on this one. Just take a look at the yeah. Even more pronounced on the monthly. So we're essentially at the cliff. I wonder if NEO takes into account the fact that we could have just an absolute protracted move left below this area if we get any significant volume. Why is the volume not showing on the chart? Anyway, I don't want to drag this out. Everybody's got places to be today, including myself. We're getting ready to take off for big old barbecue this weekend. Gold. Here's gold on the daily. I've long wanted to see. Actually, you know what? I'm going to go back to spot. Here's gold spot market. I would expect this to be going. We're going to be taking profits in client accounts because we're pretty heavy in this right now, right around 1950. Right in that whole area of 1950 to 2000. We'll be taking chunks off and lowering exposure to this as we come into what is going to be some fairly serious resistance in this. But we keep creeping up, and I know the shorts are just getting bamboozled on this one. So we may very well see a zipper day up into this area. And if that's the case, it'd be great to trade this long. But then I would be more interested in taking trades in the long and short as we get up into this zone. If you guys are manually trading this, just keep that in mind. Always take my forecasting, with a grain of salt. I could be wrong on this stuff. And none of this that I talk about is a solicitation or buy it or sell anything. It's just teaching examples on stuff that's done well. What else did I want to address? Somebody asked me about oil. I don't really trade this much, and a lot of people do, and I get it. It's fine. They call this the widow maker for a reason, though, guys. I would stay away from oil. It's acted a lot better than it used to. But all it took is some whacked out exogenistic event like took place here, where the bid went to zero, right? Which would have blown you out of all the margin in your account and or blown up your account. And now, granted, this was a crazy ass day. And the stories have never really been talked about whether or not the CME made everybody whole on these trades. I don't know. But I mean, stuff like that is just reasons why, I don't trade all these crazy tokens or any of the stuff that's more in commodity, man. Lumber is a great example. I got a question a little bit earlier on the dashboard here. So I use this dashboard a lot. There's all kinds of dashboards out there, but I think this one's one of the best. You don't need it on anything more than a daily chart, and just look at the charts. And the point here is that you have a daily comparison from a correlation standpoint between energy, right? The metals, what's going on in all the metals. Then you can see all the crazy shit that's been going on, like what you're seeing in lumber. I mean, this is absolutely bananas. I mean, this is what you call a dislocated market, right? I mean, even on a weekly chart, the price for lumber is absolutely skyrocketed. So it's costing a lot more to build houses and stuff like that now. So those not toning the inflation bell, right, are not looking at the right charts. You don't need to be an expert economist to see that this is inflationary, right? And a lot of the charts related to this, whether it be cotton, sugar, right? This is inflationary stuff. You want to be concerned about this, and all this heating up. Now I get it. Central banks have been throwing cash down upon the primary dealer accounts globally. They're looking for places. There's more cash sloshing around in this country than there's ever been. Yeah, I understand all that. But at some point, that's going to continue to bring us into an inflationary move. This is actually one of those forecasts. I hope I'm dead wrong on, right? Because everybody just doesn't want to pay more for all their stuff. It's the bottom line. So you can move back. You get down to the bottom, though, for us. And it's more than just currencies, in my opinion, but you can see the relationships between all of these charts. And double check them on the daily. Yeah, you want to look at these on a daily, but this is a great comparison from a dashboard standpoint, right? Just like if you're looking at the dashboard of a car, you want to see your speedometer and your speed and your tach and all that stuff. You can see how the relationship is to currencies. Yen weak, pound strong, euro strong, dollar weak, Canadian strong, Swiss strong, Aussie mixed, NZD mixed, at least recently. We really are going to have inflation starting to take effect. These are the two big areas you're going to want to pay attention to. US 30-year bond, and the 10-year note. All right, I think that's pretty much everything I want to cover. Let's talk a little bit about crypto, which I now at the bottom of my list. Stuff that's at the bottom of my list has less importance. So the dead cat bounce that I've been talking about is sort of beginning to show its face. Notice how we've been riding the I don't know if you can see these, but these are the moving averages. We've been riding the 200-day line, just a simple 200-day here, in this case on the daily chart. Riding that line has been the resistance. Ultimately, this is looking to me to be like a head and shoulders. I haven't had a chance to draw, but I'm assuming that we're probably somewhere in the neckline right here, with targets being probably closer to the breakouts. So I said, which I'll continue to favor, but I would reduce any size if you were buying here. If you decide to reduce size in the purchases down here, have the size be real small, because there's a really good chance we could go right here, 20,000, which would be what, 70% off from the high. Is that right? So you got to be concerned about that. Gold's going up to about 2,000 for you guys. It sounds like you may came in late. It's going up. Could be wrong. No, I can always be dead wrong, guys. So, you know, that's the great thing about being a forecaster or prognosticator. You know, we're just like everybody else. We always can be wrong. Ultimately, I would think that even the problem with this falling knife discussion is that catching a falling knife is tough. And this is actually somebody that can speak from experience, because I used to throw a lot of hatchets in college at our frat house. And I got pretty accomplished at throwing knives. And I took a bunch of cuts along the way. So the I would just be more efficient to be a buyer somewhere around 20. Still probably because there's been such damage done to the chart. If we did hit 20, there's probably going to be what they call a waterfall type day. That's where you have massive volume like you see here. Typically, this massive volume, a lot will think that this was the end of the move down, right? But a lot of cases, you almost always, in most mean reverting you know, different types of investments around the world, different instruments like this, you're going to want to revisit the scene of the crime. It's just inherent in the auctioning process. You're going to want to revisit the scene of the crime. So I would expect this to be the first area. So for those of you that are willing to step in front of this knife and buy this here, just do it with a lot smaller size than you normally would, right? Remove the greed factor, because if Steve's wrong and it does make it down to this level here, you'll thank your lucky stars you didn't mortgage the house to start buying this. And forget about all those idiots out there talking about 500K on the coin. I think they're all nuts, right? Just focus on, if we do get down to this pattern, a good basing playing out. Because if we start ripping back up, all the people that were buyers here, they're going to be sellers. It's going to take us back down again. I've seen this pattern over and over and over again. We saw it in 2017. If you drop back to the monthly chart on this, when this happened last time, let me show you guys this. This is going to require a pretty good expanding to show you. Now, this is a monthly chart because I think it just illustrates the point without having too much noise in here in terms of candles. We had just an absolute monster. We even had a shooting star take place up here. This is when I said, get out. A lot of people thought I was nuts, thought I was going much higher. But look how long it took for the pain to finish. I mean, it took, what are we, January of 18, right? All the way, basically a year. And then we came back up and made another shot at it again. You know, ideally, this is a monthly chart. It probably could be best illustrated on a weekly, but you just have to shrink this way out. But we had on this weekly here, it took many months for this to play out. Yes, the guys that bought the first dip off of the 50-day line bounce here, you know, they made some money. A lot of these people weren't smart enough to buy. They thought they'd buy here because it was going much higher, like up to here, right? Like the current mentality. I can't tell you how many college kids I have seen and millennials that have absolutely zero experience of trading that have taken chunks of their parents' money and put it into crypto at some of these bigger numbers, right? And they just get absolutely lambasted. So emotionally, they're going to be crushed. When you say, when you look at this chart, set the scales, it's a bit wonky. When you look at this chart, this correction doesn't seem like all that much, does it? Right? Because we're on a weekly now. And then you want to take a look at this in a monthly chart at some point as well to see where we are. But you know, it seems like, you know, all roads lead to 20K in my opinion. And if you're wrong, I should say, if I'm wrong, there could be. You can put a little in now, right? Just fully expect that what you put in now could get cut in half before we finally find the bottom. Just remember that. As long as you're okay with that. The last thing I'm actually going to leave you guys with is this statement, which I've been seeing a lot. I'm going to post this in the chat window to everybody. I want you guys to remember this because it flies completely in the face of what you're seeing. This whole hold on for dear life shit is exactly what it is. It's crap. It's not a risk management plan. Remove it from everything. Just wipe it out of your brain. Holding on for dear life is not an investing strategy. You're seeing this in mass among a lot of the crypto space. And it's a way for people to convince themselves subconsciously that things are going to go back up. And I can tell you from maybe not a lot of experience as far as a large data set, but among traders that, because I run with a pretty big crowd of people in trading land here locally in Temecula that are much younger than I am, in some cases 10 or 15 years younger than I am. And, they just thought they'd put all their money in crypto and it would go to the moon. And many of them lost, several $100,000 and they never got it back. And, two of them, it's actually completely wiped out the relationship with him and his wife. And the other one, it caused a divorce because he blew up about 200 or 300 grand of their money. So, just be smart about this stuff. Trade in small batches. There's nothing wrong with getting rich slowly, right? It's the best thing I could teach to people. And the impatience of today, where most people are pissed if they have to stand in a Starbucks line for longer than 10 minutes, it's not going to bode well for you guys as investors. Completely flies in the face of whoever your favorite investor is. It could be Warren Buffett, it could be whoever, right? So just be smart about that. I'll wish everybody a happy Memorial Day for the U.S. citizens. Have a good weekend for everybody else. Again, my name is Steve Vetterl. Host these calls every Saturday and Tuesday. Try and keep you guys safe. Be well.